All right, here we go. So, what is happening in the markets? The S&P and the Nasdaq had 8 winning days in a row, and yesterday they snapped the 8-day winning streak. So, both indices, all indices, actually finished lower yesterday. So, what's happening today? Today, the Fed meeting minutes will be released. We had some retailers reporting earnings: Target, Macy's, and TJX. And wow, there's a lot going on there. And just a few minutes ago, the Labor Department released a bombshell. So we will talk about this and see how the markets are reacting to this. Now, with that said, welcome to Coffee with Markus and Mark. And today is Wednesday, August 23rd. No, August 21st. There we go. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And yes, I'm still solo. Mark is on his well-deserved vacation. He will be back next week. So what's happening here? We see it. 8 winning days in the row in the S&P. And then yesterday, slightly lower, but just taking a quick breather here. Really nothing to be concerned about. In the S&P yesterday, we finished down 0.2%. In the Nasdaq yesterday, we finished, also 0.3% in the Dow yesterday. Let's see where we finished there. I think it was down 0.15%. So, I mean, basically almost unchanged. It just snapped an 8-day win streak. So we talked about it. What's happening this week overall? Not a whole lot on the calendar. As you can see, the economic calendar, pretty quiet, but it starts to pick up this afternoon. This afternoon, we have the FOMC meeting minutes at 2 p.m. Eastern time that will be released. Then tomorrow, the unemployment claims, flash manufacturing PMI, and flash services PMI, all three reports, red flag. So this could move the market. And then the event of the week. Powell is speaking at the Jackson Hole Symposium. And 2 years ago, I mean, he sent markets in a tailspin. I think markets went down 10 or 12%. So what will he say this time? And what does he say about the Fed and their policy about lowering interest rates? Well, this is where we see what traders are expecting. Traders are expecting the Fed to lower interest rates. But as you can see right now, we are back to 70% for a quarter percentage point and 30% for half percentage point. So we're getting closer to 50-50. And again, this is all subject to change on Friday. So today, some retailers reporting earnings. Here we go. The earnings calendar. We do have TJX reported earnings before the bell. Target reported earnings before the bell. And also Macy's reported earnings before the bell. So let's see what happened with these companies. And we see, first of all, Target blowing it out of the water. And I mean, Target was jumping earlier, 14%, still up almost 11.5%. So as you can see, Target, much better than expected earnings. So as you can see, they came in with a 17% surprise to the upside. Revenue kind of in line with expectations. However, Target also said, well, we are maintaining a cautious outlook for the year. So not too concerned about a recession, but saying cautious. While Walmart last week said, oh my gosh, we are doing great. Anyhow, talking about Walmart, Walmart had a stake in JD.com, the Chinese tech company. And this morning, Walmart said, you know what? We're selling all of this. We were not too happy with it. And as you can see, JD down 6% right now. Early in trading, it was down, I think, as much as 8%. All right. TJX. This is the company who is behind TJ Maxx, Marshalls, and all of these. As you can see, they also reported better than expected earnings, better than expected revenue, and are up 5.7% this morning. Now, Macy's, on the other hand, look at this. The third retailer reporting earnings today, and Macy's down 12.5%. So massively down. And you see, I mean, the revenue was good. The surprise also, the profits were good, the earnings good. A little bit lower in revenue, but here is the deal. Sometimes it's all about the guidance. And this is where Macy said, yeah, you know what? We are cutting our full year forecast because we see that Shoppers are more selective, and now there is the R word again. Does this mean we do have a recession? And you see, this is where right now we have this tug of war between bulls and bears going on. So we had Lowe's reporting earnings yesterday, and Lowe's finished slightly lower because they said, well, we see that shoppers are pulling back. We have Macy's who say, well, shoppers are being more selective. Then on the other hand, last week we had Walmart jumping on earnings because they say, well, we don't feel it. We have Target jumping higher. We have TJX jumping higher. So now the question is, who do we believe? This is where today, I mean, as you can see on the 5-minute chart of the S&P, we at first were moving higher and say, okay, I think we believe more what Target has to say, what TJX has to say. Lowe's wasn't bad at all. And then, of course, Walmart. So right now we are discarding a little bit what Macy's have to say. And again, this is just the tail end of earnings. So markets are just looking for something before the big events start this afternoon with the Fed meeting minutes. Now, you might be wondering, okay, if the markets are waiting, why do we have such a reaction here? I mean, we were going up on the 5-minute chart of the S&P 500. You see that we were making new highs for the day, and then suddenly a drop. So what happened? Well, guess what? The Labor Department dropped a bombshell and basically says, oh my gosh, we had to revise the non-farm payroll growth down by 818,000. Now, as you know, 2 weeks ago, we had this unemployment reports that sent markets massively lower. So if you look at the S&P on a daily chart, we see that this massive drop that we see here was caused by the jobs report. And this is why traders are right now saying, okay, so what's happening here in the labor market? Are we going into a recession? And this morning, when the Labor Department says it is revised down by 818,000, that's quite a lot. However, here's the deal. This is where, first of all, this is for a 12-month period through March 2024. So this means from April 2023 to March 2024, the Labor Department said, well, the job growth was 2.9 million in these 12 months. And now they said, no, sorry, we were wrong. I don't know. How can you be wrong? I mean, and how do you notice it? Like 6 months after you have reported all this? Anyhow, long story short, they say now it's actually 30% less. 30% less. That's quite a lot. So instead of 2.9 million, it would be only around 2 million jobs that were created. Now, the good news is jobs were still created, but now traders are saying, oh, okay, we bring up the R word again, the recession word. So is this something that the Labor Department has been hiding from us for a long, long time? And to be honest, I mean, this is just part of the annual review that they're doing, where they look at the numbers and say, let's see, did we get this right? And they say, nah, we didn't get it right. We were actually wrong, and we were off quite a lot. But 30%, I think, wow, 30%, what do you know? Anyhow, so this is where the markets, if you look at a 5-minute chart of the S&P here right now, are reacting to this and say, okay, so what's happening here right now? Excuse me. Do we have a softer jobs market? Are we doing good? Are we heading into a recession? And this is why right now, as you can see, the indices are all pulling back. The Dow is pulling back right now, down 0.08%. The S&P is still slightly up. The Nasdaq slightly up. The Russell slightly up. But after making new highs for the day, now we're kind of where we opened here. So a little bit bigger picture, if we look at this and a 50-day moving average in the S&P, nicely above. Even the Nasdaq managed to break through. So today seems to be just another day to take a quick breather here before, as at this afternoon, it all starts with the Fed meeting minutes and then 3 important economic reports tomorrow and on Friday, Powell speaking. So this is what we see here overall in the markets. Also for gold, we talked about it yesterday. Gold's making a new all-time high. Today, pulling back a little bit, 0.3% after closing at all-time highs yesterday. And finally, we should probably also take a look at crude oil. And crude oil slightly higher today. However, if you look at this range, trade at the lower range, right between where we were between 70 and 80, somewhere around this, with some spikes up to the upside, some to the downside. But the 70 to probably 85 ish. So 73.29 for crude oil here this morning. All right. What does this mean for us and our positions? Well, let's hop over to the WTF analyzer. And with fear exiting the markets, we also exited all of our WTF positions. No new positions here, no open positions, no exits. So probably something might happen in the next few days. So we might get a few more entry signals tomorrow, depending on what the Fed meeting minutes say this afternoon. But right now, nothing to do here. So we can focus on our wheel positions. And in our wheel positions, first up, we have CSIQ. CSIQ a little bit all over the place today, up 1.45%. And the biggie is nothing's going on here because tomorrow, before the bell, CSIQ, Canadian Solar, is reporting earnings. So let's just see, what do they typically do when they report earnings? And we hop over to our earnings analyzer that we have in PowerX Optimizer here. And you see that over the last 12 quarters, usually the overnight price move reaction is kind of 50-50, right? 6 times to the upside, 6 times to the downside. When we look at the price move reaction on the 7th day, so after a week, now we see a slight distribution here to the upside. 7 times it was to the upside, 5 times to the downside. But we see it's a pretty even distribution. So on average, we see if you're moving lower, it's 10.5%, 8.5% if you're moving higher. So looking at what happened most recently, we see that most recently CSIQ has been moving lower. So we see here in when was it? May 9th. So for Q2, 10% lower. Before this, 7% lower after 7 days. And here we see what happened immediately. The closing price before earnings and the overnight price change. So slightly down, slightly up, overall down, but then recovering after the 7 days. So we will see what happens here tomorrow. And here's our plan. So if tomorrow we see a move to the downside, then we are inclined to fly another rescue mission. So we still have some buying power reserved for another rescue mission here, trying to lower our cost basis. If it moves higher, we'll be happy and see that it moves hopefully higher towards our cost basis. Halliburton today with crude oil being slightly up. Halliburton is up 1%. Not enough to sell calls against my existing position at 34.50. But as you can see, I mean, trading close to my break-even price at 31.97, at 31.40 right now. So still having to wait here. BP, Mark's stock that he got assigned. I mean, he got assigned at 34.50. And as you can see, he probably was able to sell calls against his position on Monday, yesterday, pull back. Right now, up another 1%. So overall, the energy sector is doing good today. Coals, that is a position that I'm in. And Coals today trying to decide, okay, do I rather believe what Target is saying? Do I believe what TJX is saying? Because again, Target is up, around 11.5%. TJX is down around, I think it was 6%. But then we also have Macy's that is down. I think it was 14%. Can't remember, right? We talked about it earlier. So this were Coles right now saying, well, I think that we are probably more similar to Macy's than to Target. But are we also similar to Marshalls and TJ Maxx, which would be this? So this were, as you can see, up 6% here, down 14% here. Coles seems to say, you know what? For now, let's be cautious, down 1.7% for today after moving higher here this morning, right now trading at session lows. I have a position at 21.50, right now trading at 19.38. So nothing for me to do right now. And we do have another 7 days before Coles reports earnings, and this will be next week. Merck, good old buddy Merck had a good day yesterday. So if you look at yesterday, we were up 0.6%, which again for Merck is quite good. Today we are somewhat unchanged, trading close to my break even at 116.01. Still have to wait here until I can sell calls against my existing position at 120. And then UPS has decided to stay in this range here, and the range is between 140.24 and 132. Trading pretty much in the middle, dead smack in the middle here at 128 right now. So you see, this would be the middle of the range, and decides what he wants to do right now. So let's see if we can move higher here and break out. All right. Excuse me. Let's take a look at the heat map and see what sectors are performing well today. And you see, overall, financial services are slightly down. So this sector is down. Energy, which was down yesterday, recovering today. The tech sector kind of mixed here. What we see, Nvidia slightly up, AVGO, Broadcom slightly down, Texas Instruments up, MU down, Apple around unchanged, Microsoft unchanged, slightly down. So not a whole lot going on. So let's see how the markets are reacting to the news that we just got from the Labor Department a few minutes ago. But before we do this, it is the time of the day in the show. Well, I'll tell you a dad joke. Usually Mark and I tell you dad jokes and let you vote which one is better. And I saw that some of you said yesterday, my joke yesterday was good. So I decided to step it up today. So let's see if I can get a chuckle out of you today. So question for you. What do you call somebody who is limping because one of his legs is shorter than the other? What do you call a person like this? A sniper's nightmare. Sorry. Is it a good one? Okay, leave a comment and let me know what do you think about this one. If this was a little bit better than yesterday's. And let's go back to a 5-minute chart in the markets to see what is happening here after the Labor Department dropped a bombshell. And we see that initially the reaction was like, oh, shoot. And now the reaction is like, you know what? Let's wait what happens this afternoon with the Fed meeting minutes. Let's wait what happens tomorrow when the weekly unemployment claims are being released and the flash PMI. And also, let's see what Powell has to say on Friday morning at 10 a.m. Eastern Time. There we go. All right. With that said, I hope that you enjoyed today's show that I'm still doing solo. And if you did, give me a like. I really appreciate this. If you also like it that Mark is on his well-deserved vacation, give it a like too. I mean, he watches the likes. Trust me on this one. If you felt this was some good stuff worth sharing, there's a share button right underneath. Please feel free to share it. If this is your first time here, subscribe because you don't want to miss what's happening tomorrow after the Fed meeting minutes are being released and also after we see the weekly unemployment claims. We talked about this. So until then, have a great rest of the day and leave a comment if today's joke was better than yesterday. All right, I'm competing here with myself. See you guys tomorrow.